China's central bank is sending a clear signal. It is ready to act if the economy needs it. The People's Bank of China said this week it will make timely adjustments to monetary policy. In central bank language, that phrase carries weight. It typically means policymakers are watching conditions closely and are prepared to ease, whether by cutting interest rates, lowering the amount of cash banks are required to hold in reserve, or pumping liquidity directly into the financial system if incoming data weakens further. The backdrop matters here. Beijing is managing a stretch of slowing growth, a property sector that remains fragile, and consumer demand that has been uneven at best. Against that backdrop, a public pledge of flexibility from the central bank is more than routine. It tells markets that authorities will not sit on their hands if conditions deteriorate. For investors, that kind of reassurance can be significant on its own, even before any concrete action is taken. Markets tend to price in the expectation of easing before it actually arrives. Alongside that broader commitment, the People's Bank also announced support for China's Panda bond market. If you have not heard that term before, here is what it means. Panda bonds are debt instruments issued inside China, denominated in Chinese yuan, by foreign governments, companies, or international organizations. So a European company or a foreign government raising money in yuan inside the Chinese domestic bond market is issuing a Panda bond. By backing this market, Beijing is pursuing two goals at once. First, it wants to deepen and develop its domestic bond market, making it more attractive and accessible to global issuers. Second, and more broadly, it is advancing its long-standing goal of internationalizing the yuan, reducing the world's dependence on the US dollar for trade and finance, and giving the yuan a larger role in global capital flows. For international investors, a more developed Panda bond market offers something practical, a way to access Chinese capital markets without taking on currency exchange risk from other currencies. These moves fit a pattern that Chinese authorities have followed this year, using targeted financial measures and careful central bank messaging to stabilize confidence, rather than reaching for large, blunt stimulus packages. The open question is follow-through. Pledges from central banks matter most when they translate into actual policy changes. Investors will be watching the People's Bank of China for concrete moves, rate cuts, or reserve requirement reductions in the months ahead, and they will be watching whether Panda bond issuance picks up in a meaningful way. The pledge is on the table. The data will determine what comes next. This briefing is brought to you by First Financial News. Clear, daily coverage of the economy and markets at firstfinancialnews.com.